Hi, everyone. So again, my name is Teare. I'm the senior data editor at Crunchbase, and I've been at Crunchbase forever. So since 2008, when it was still part of TechCrunch, it spun out and is now an independent data company. And I spend a lot of my time looking at the data in Crunchbase to understand funding trends, and then talking to VCs and founders and analysts in the industry to see if what we're seeing in the data matches with their experience or if something very different is going on. Here, obviously, we run the unicorn board, and you can see there's a lot of unicorns, some, not that many, who've been dehorned, and obviously the rise of AI within the venture markets. So we're going to quickly look at, by the way, I did love the Mind the Bridge report. I thought it was incredibly helpful, and dissecting and understanding and looking at M&A trends, I think is often very, very challenging because companies have quite varied histories over time. And so I think it's a great sort of addition, the whole report. What I'm going to look at today is really the sort of venture markets behind that. So all the funding going into the global ecosystem. We're also going to look at the US, which is the largest, and Europe. I think many of you hail from Europe. A little bit understanding the exit markets, but you guys are going to dive into that. And then what's next? What are we seeing? So this is the global venture market 2015, so really the last decade through September 2024, the most recent numbers. And I kind of track where we're going to be, we think, this year based on current trends. And I think what's interesting here is you can see over the last decade, the global venture ecosystem has pretty much grown year over year. You can see 2019, 18, 19, 20 sort of plateaued. And then 2020, was the beginning of the pandemic. And I think what's interesting about the venture ecosystem is it often takes a while for trends to travel through. So you can see the big jump in venture funding happened the year after the pandemic started in 2021, where there was a complete rush to invest in startups. And you can see here every single stage grew. Seed, early, and late grew. Late grew the most, but absolutely every stage grew at that time. And when you talk to investors, what they said is, if they invested in a seed round, they saw those companies pretty quickly go and raise the next round, and so they were compelled to invest more and at higher values. The same happened at early stages. You could invest and those companies would raise quite quickly, and so there was this sort of ongoing sort of trickle effect. I think what's interesting in 2022, the market collapsed at the end of 2021, and you'll see here in 2022, it took a while for that message to filter through. And I think partly the industry was trying to understand, is this collapse that we're seeing, that we saw at the end of 2021, is this going to be sustained? Is this a blip? If you're in the private markets, there's a ways or time to going public. And so are we really impacted? And I think it became very clear in Q1, this was going to be sustained, this was going to be ongoing. And so funding came down in Q2 a bit, and then Q3 quite substantially. So we're at the sort of 300 billion, just under, I think, for this year is what I'm tracking. So it's slightly below what we saw from 2018 to 20, but not massively. So 2021 is an aberration, and where we are on funding amounts is sort of in line. And I think AI has definitely contributed to the fact that it's not lower than we're seeing. And what I'm also seeing in the data is a lot of the most active multi-stage venture firms have pulled back, not only obviously from 2021, but even prior to that. They've been much slower to deploy capital and are focused much more on the sort of seed funding specifically, even less so early stage, but more at seed. These are the same trends, and I won't dive into them, but in the US typically is around 40% of the global funding market. In 2024, it went up to about 55, a higher proportion, above the 50% market, around 55%. And I think that was largely to do with the massive pullback in funding within the China market specifically. But you can see similar trends here in the US market, the biggest market, where it doubled. It came back slightly in 2022, and then 2023 and 2024 are the new normal. This is Europe, the European venture ecosystem. What we find is Europe represents around 17 to 18% of global venture. I think what's interesting in the European context is the trends were slightly different, where the pullback was much slower in Europe, I think because it's more of an emerging market, so there was still more appetite for European startups in 2022. And then what you also see if you come through to 2024, that, again, because Europe is more of an emerging market, it has a growing venture ecosystem. What we're seeing is it's actually going to be above the 2020 values for the European venture ecosystem. I also think it's worth noting on the European venture ecosystem is that it actually punches higher than these numbers say, because many European startups do move to the US, are headquartered in the US, they still have a strong footprint in Europe, but we would then put those into the sort of US bucket of companies. So Europe punches higher than this, but as you can see from here, Europe's a sort of growing ecosystem. This is just the same numbers quarterly quickly to show that you can see Q1 was still incredibly strong. Q2, the market started reacting, and then Q3 is where it came down. And I think what's interesting about this, just to show you, is it's sort of trundled along. So we're not seeing a sort of downward slide of investment. We've seen sort of a fluctuating, and that fluctuation is often driven by if there are a lot of very large late stage rounds in a quarter, that will drive it up, and if they pull back, that will drive it down. The Crunchbase Unicorn Board is something that we use to track the most highly valued companies, and I think the trends here are always interesting because it's illustrative of where the market is. Obviously, we saw a massive shift in this board since the end of 2020, where all the numbers more than doubled, you can see here, and I think when I look at the Unicorn Board today, you know, most companies on the board have not raised since the second half of 2022. So 2022, there was still a strong pace of new unicorns coming onto the board, and in 2021, and I'll show you those numbers. So typically what I would say, if you wanted a more realistic value of where these companies are today, you would probably halve each of these top line numbers to get where, if these companies were raising today, where they would more likely be valued, or around 40%, 40 to 50%. There's obviously been a couple of hundred companies that have joined in the last 2 years during the slowdown. Here you look at the pace of new unicorns by year globally. And again, you see just very similar trends where it kind of massively shot up. You can see late stage went up massively in 2021, more than doubled. 2022 still incredibly strong in the second half. And then we're back to around 100. And I think what's interesting here is, and it really shows the concerns about the exit market, specifically the IPO markets, you can see that we're back to 2017 levels, not back to sort of 2018, 2019, and 2020. We've gone further back in terms of the pace of new unicorns. And obviously that's partly driven by the fact that there are so many companies who joined in the 2021 period who might have joined in after years if they've grown into those valuations. I think another interesting thing just to be aware of is 2015 was the year of the unicorn. So that was the first year where there was a massive kind of plethora of companies being valued at $1 billion as a private company. That was unheard of before in the industry. And so you can see the industry has changed considerably since then, where our expectations and the amount of money companies can raise as private companies has massively gone up, and those valuations. This is something I've added, which is just to look at how the number of unicorns at the end of a year, and what this doesn't, this only includes the companies that are currently unicorns. So if a company is exited, they're no longer reflected in these numbers. And what you'll see is obviously a massive jump between 2020 and 2021, 2 trillion to 4 trillion in value. And then 21 to 22, there was still a growth. As I say, 2022 was still a pretty hot year. You can see in terms of the amounts raised by the companies who are on the board, it jumps up between 2021 and 2022 quite significantly. And then the board keeps growing, but we've been more of a holding pattern where the value is sitting around this 5 billion mark since 2023. And the counts are going up because fewer companies are exiting than are joining on an annual basis. But you can see it's slow. So every month I look, it's kind of slowly climbing, but we're not seeing the numbers we saw in prior years. AI, we've written a lot about AI, as is everyone in the industry, and everyone's trying to understand what this means. I am going to look at funding trends around AI because I think it's very interesting. We've written about the fact that the SF Bay Area has become the leading arena for this investment, and not really when you look at deal counts or deal activity, but when you look at dollar volume, you can definitely see this area sort of taking off with all of the AI companies that are here. This is a representation of global funding to AI since 2015, so over the last decade. And I think what's interesting here is you can see 2021, everything was up and to the right. So everything we see today is below what we saw in 2021. But it's interesting because, you know, a lot of people have been discussing AI this year. The bloom has come off. The revenues that the AI companies are not really meeting their compute needs, and so the blush has come off AI. But what we're seeing in our data is that more money is going to go into AI this year than last year. Again, it takes a while for things to trickle through, and also for those higher rounds and higher valuations to be achieved. But also proportionally, the amount of dollars going into the AI sector has grown year over year. When you look at this data, it does mean companies today who are important to AI, who wouldn't have been tracked as AI, would be represented here. So that 81 number will be higher than if we pulled it in 2021. But nonetheless, as I say, this year is going to be a pretty strong year and almost probably close to meet the 2021 numbers for AI investment. So we don't see that AI train slowing down anytime soon. Just on the exit markets, and I know Alberto is going to go into this a lot more. Obviously, we're writing a lot about the fact that we're 2 years into this downturn. The exit market, the IPO markets have been incredibly slow. This is just looking at US billion-dollar exits over the last 5 years to get a sense of the shifts. Obviously, everything in 2021 was up and to the right. The green line is the M&A deals. I think what's interesting, and I just wrote a story sort of inspired by Mind the Bridge, just looking at first exits for companies. And what we find is 2024 looks like it could outpace 2023, but both of those years are massively down from prior years. And as you can see, IPOs, SPACs, massive, a lot happening in 2021. A lot of my friends in venture seem to be very happy because there was a lot of liquidity that year. And obviously things have massively slowed down since then. So what are we seeing in the data? We've seen, whilst every single funding stage is down, we've seen seed sort of as the most robust in the ecosystem. And when you talk to people, there's a lot more activity happening in seed. Companies are raising more seed rounds. They're raising larger seed rounds. They're spending a lot longer in the seed pool, and getting to a Series A has become a lot tougher. And when you talk to investors, they say it's gotten tougher because they know to raise that Series B is going to be even tougher. And so that has sort of impacted the whole market. But seed is definitely the most robust funding stage, despite the fact that it is down compared to the other stages. AI is obviously having a massive impact. Those numbers that you saw, I don't think it's affected the overall outlook of a slowdown because investors are all looking for liquidity, and that has not been on the table. And Alberto will dive into that more. But AI has had a huge impact, and I think you could take 10 to 20% off fundings in recent years if you wanted a more realistic value. I am seeing some of the more active multi-stage investors beginning to pick up the pace this year, so it'll be interesting to see if that continues and if that moves into the sort of early stage funding rounds as well for some of the seed stage companies that are coming through. And obviously, we're still in this holding pattern. We're more than 2 years in now to investors looking for liquidity. And what I hear from investors, the IPO markets are incredibly challenged at this time. Why would you go public when the valuations are so low? And so M&A is seen to be the fastest ticket to get liquidity in this environment. Thank you all.
Try. Okay. So I think a lot of inputs, and I think it probably might be good to digest internally.
Plenty of time here for questions. You gave us a lot of data.
You can go first if you want.
Go ahead. We don't have time.
Okay, great. I'm David Chu from PG&E. Thank you very much for a wonderful presentation. I was curious about what you think, based on sort of what you're seeing on the cutting edge of the data, what Q3 and Q4 of 2024 might be looking like, especially as a potential response to Fed interest rates dropping.
Yeah. So what I'm seeing in the data already in Q3 is that sort of it's tracking what we saw in Q2. So I think for the rest of this year, investment, I don't think it's going to slow, but I don't think it's going to pick up. And again, as interest rates come down, I think it takes a while for this ecosystem to react. So I think we'll see the impact in 2025. And definitely, I think where that impact will show up is in the fundings at the early and later stage, where that will become more, there'll become more interest in fundings at those stages. So I think if interest rates come down, we'll definitely see that. I think on the IPO market side, what's interesting is there is the sense that there are a lot of companies who are waiting to go public, who've gotten their, they've gotten their financials in order, and they just see this market as completely unattractive to go public in. And a lot of analysts that I speak to say they're all holding. So I do think we're also going to see the opening up of the IPO markets next year as interest rates come down. And I think that's also going to spur the industry.
Hi, Andrea from Enel. Thank you for the presentation. I wanted to ask you still on this IPO bottleneck, if you see a coming back of the SPAC or if you think it's going to be more a traditional IPO process.
So I think I don't see SPACs coming back. You can see in SPACs completely dropped off in the last 2 years. And I think in 2022, there were still some SPACs, but they were sort of holdovers from before. So I don't think we're going to see I think we will see some SPACs, but I don't think we're going to see a large number of SPACs coming back.
Hi, Bill Lowenthal. I'm an independent EV advisor. The numbers you showed were outflows from the funds. My question is, what do you see on the inflows of the funds? I'm seeing so many venture funds, and I'm seeing lots of new minted billion-dollar funds. So how are you seeing that stack up by asset class?
Yeah. I think the inflows into venture have definitely been slower this year. They were pretty strong in 2022. I think they almost outpaced what we saw in 2021. So we are seeing venture firms have a lot of capital on the books to expend, and they're not spending that money. So I don't think there's any shortage of capital in the markets. I think one of the questions that the slower M&A environment raises is whether some of these smaller funds are going to be able to make it through. Because if 90% of exits are M&A and there's less of that happening, I think it's going to be much more challenging for those earlier stage funding and that seed market. And so it'll be interesting to see if that shifts quite dramatically.
So, Jenny, what do you think about the current valuations or overvaluations of the top AI startups, right? So there's a lot of exuberance. So just talking the top line, the OpenAI, passing the 100 billion valuation in secondary market. Do you think that is warranted by really the potential, or we're somewhat living in a bubble? Yesterday we had a kind of a conversation, who's reaping the profit today? All these exuberance is not really still the AI companies. It's mostly people that are selling the shovels, right? Is the NVIDIA of the world that is going ballistic because you need to have the infrastructure to run these systems. What are your thoughts in terms of where is this going? Is that money well spent at this moment to get into high valued AI startups?
It's difficult to say. We have one other company that went public, a Facebook US company that went public above 100 billion is only Facebook. So I think and SpaceX is the one other company that's on our unicorn board in the US that's valued above OpenAI. So I think it's a pretty hefty valuation, but OpenAI is one of the leading providers in the sector. So I don't think you can bet against them. So it seems a little exuberant. But, given what this company could become and could be worth, possibly not. We'll see.
Other questions? I think Marco just threw you a curveball to you, but I have another one. Is looking at the data, and particularly was particularly interesting when you're looking at the different stage. Again, we saw 2021 peak, and then the peak. I think we see the slowdown starting from the later stage, then going downwards to early stage, probably a couple of quarters delay. And then we started from the US, and you have probably 9 quarters, 1 year delay, moving the slowdown to Europe and to the rest of the world. Assuming that at a certain point will start growing back, how do you see that the growth path among the different stages, among the different geographies, where you see it happening first? We'll probably start from the early stage and move it to the later stage, or the other way around. How do you see that?
I think most likely the early stage, where I think there is, even though if the IPO markets open in 2025, as I said, there's a massive backlog of companies who've already raised lots of money. And a lot of these companies don't need to raise more to go public. They're sort of sitting and waiting. They have a lot of money on their balance sheets and they can wait to go out at the right time. So I think we're not, that late stage, there's so much money that's been invested. There are so many companies kind of poised. So I don't think, and you will see, we just saw the Clear, I think, raised 900 million. I think that would have been, which is a legal tech company, I think close to 20 years old, that just raised, they wouldn't have raised a 900 million round without AI. So I definitely think you are going to see those large rounds happen, but I think it's going to be more at the bets at the early funding stages. So Series A and B, I think will benefit if the market comes back more.
Okay, perfect. Any other question from the audience over there?
Thanks. Hi, I'm Pranita, and I work in circularity, renewable energy, and sort of prop tech. And so I loved your insight about, recategorization of a bunch of companies into AI, which wouldn't have been thought that way. And I think in kind of startup circles, we all joke about, we'll just put something about AI in your deck, and that's the only way that you can raise money right now. So I was curious if you're seeing any trends. There's a lot of talk about, there's so much more capital now for climate tech. Are you seeing that at all in the data? What are some of the other categories that you're finding, whether in energy or renewables, that we should be seeing, like we hear about, there's all this capital available, but are you actually seeing that in the numbers? What are some of the other industries that are kind of growing apart from AI?
Sure. So this year we have seen AI has become the sort of leading industry for investment. Close to that, and over the last 2 years, another leading industry has been healthcare and biotech has been incredibly strong. And we've seen a lot of consumer tech obviously fall off. Financial services, which was the leading industry in prior years, has also come down. I think energy, we are seeing energy, and I'm not going to remember if there is a lot of money going into the energy space as well and climate tech. So I think that is a sector which hasn't come down as much as everything's come down, as I say, but it's a sector which has had a lot of investment and attention. So I think that's definitely one of the sectors which has been growing. The other sector which again relates to AI, where we've seen a lot more investment, is in the hardware space, and that's because of semiconductor and robotics. So that's very much AI driven as well.